Hey, it's Rob Weinberg, and on this channel, we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time watching us, go ahead, hit that subscribe button, and don't forget to get notified on all of our new content every single week. In today's whiteboard lesson, we're going to be diving into DPA, which stands for Down Payment Assistance, the different types of down payment assistance, and exactly how they work. So if you're watching this lesson, you're probably a first-time home buyer who's tight on money looking at the different options that you have for down payment assistance. So we'll talk about what they are and how they work here right now. Before I get into it though, what I want to say is that down payment assistance is not the ideal way to buy a home. I said it, it's not. If you can't afford a minimum down payment on a home, you really should reevaluate your financial circumstances to make sure that you've got an emergency fund, savings, things that are needed to be a sustainable homeowner. But with that said, I understand that with the prices escalating, with inflation being so high, it's difficult to save up even a minimum of 3.5% down in today's economy. So these down payment assistance programs can come in and come to the rescue. But down payment assistance doesn't mean no money needed. With any of these programs, you're likely still going to need some money for closing costs, attorney's fees, lender charges, processing fees, prepaid taxes, insurance, etc. And depending on where you're at in the country and the price of the home, those closing costs could easily end up being $7,000 to $10,000 or more. Now, in the old days, you could get possibly a home seller to pay some or all of those costs for you. But in the current market, with it being a seller's market in most areas, sellers just aren't willing to pay those charges for you. So as a first-time buyer, even getting down payment assistance, be ready for $7,000 to $10,000 or more in actual closing charges. You have to be ready for that. There's just no way around it. Now, different types of down payment assistance we'll be discussing. Forgivable down payment assistance, repayable down payment assistance, and the new one, SAM, which stands for Shared Appreciation Mortgage. So we'll dive into how these work. First of all, the forgivable down payment assistance. I think this is the one a lot of people think of when they hear down payment assistance. This is where you're going to get money from state or local government or a lender, and that money will be forgiven based on a certain schedule or based on a certain criteria. So the forgivable down payment assistance means that they're going to give you the down payment. Generally, it's going to be 3.5%. Some of them will give even up to 5% of the price of the home, which can help to cover some of those closing costs we were just talking about. So there's a lot of different flavors of the forgivable down payment assistance, depending on whether it's an state regulated one or if it's one from a lender, but there are a lot of different options on that to talk to your advisor about. Now, on the repayable down payment assistance, the repayable is just a second mortgage on the property. So they're going to give you a second loan, which will be on the title of the property, and that second loan will cover 3.5% to 5%, depending on the program, of the price of the home. That will take care of the down payment, and again, sometimes a little sliver of those closing costs that you'll need to pay. But with the repayable one, there's actually a monthly payment, a monthly obligation that you're going to need to pay, at some point. Some of them are repayable. You have to do that right away. Other ones are repayable after a certain amount of time, okay? But that is going to be an additional monthly payment that you're going to be responsible for, and that will be counted against you in your debt ratio. So make sure to ask your lender or mortgage advisor about exactly how that's going to work. The last one we'll touch on here is the SAM, Shared Appreciation Mortgage. This is one that's much newer and innovative, and the SAM program allows you to get money for a down payment in exchange for future appreciation on your property. Okay, so the most recent one I saw from one of our investors split the appreciation. 40% went to the lender, 60% went to the borrower, the homeowner. So in that case, you're going to give up 40% of the appreciation on the home in exchange for them giving you that down payment, right? So there's a huge return on investment for the shared appreciation mortgage and the lender that gives that to you, but realize that there's also risk, because if the home value goes down, then there is no shared appreciation, right? So there is a higher risk with that, which is why the terms are a little bit more favorable towards the lender versus the homeowner. So with all these said, there's a lot of different options as you're seeing. All of these have different programs, different lenders that offer them, different institutions and ways to get these down payment assistance programs. So you want to make sure you're working with a lender that understands and has access to a breadth of these programs. programs. You don't want to be working with a lender that only has access to 1 or 2 down payment assistance. Personally, I've got access to over a dozen programs, and that's just on the lender level. On top of that, there are other programs through state and local governments as well. So I hope this has given you a good primer about down payment assistance and the different types that are out there. I do recommend doing a one-on-one personalized consult to get a custom situation, a solution for you and what you're looking to do in your home buying experience. I do offer those one-on-one consults, so you can reach out to me by call, text, or private message. My direct line is 860-413-3938. As always, I hope that helps, and we'll see you next time. Take care.